Bloomberg. We're joined by Jason Tyler, Senior Vice President and Director of Research for Ariel Investments in Chicago. Ariel's two main mutual funds each have returns in excess of 120% since the market lows in March. Jason, that's a pretty great track record. You are not thrilled to see some of these banks repaying TARP. Lots of people say it's a great thing that the banks are giving the money back to the government. Explain to us why you feel somewhat differently.
Well, it's a couple reasons, Eric. One is, frankly, that I think it's a little bit early. I think a lot of the fear that the market has around, particularly around commercial real estate, those assets haven't flushed all the way through the system yet. And so I would have preferred to see a lot of these large banks hold on a little bit longer. And frankly, they're not repaying TARP because they feel like it's time to do it. They're doing it because their competitors are doing it. So I think there's been this race, which in some ways is unfortunate.
Okay, so what was the cardinal mistake there? Was it Bank of America pleading with the government and, of course, the regulators conceding that, yes, we do need to allow BofA to get out so that they can find a new CEO, which incidentally doesn't appear to be going very well?
Well, frankly, Eric, it might go back even farther than that, I think, in trying to create this this environment in which the TARP money is seen as a negative as opposed to another sound capital source, and probably allowing all of these large institutions to focus so much on compensation, which we'd all have to admit is probably one of the big reasons at the core of why they're racing to pay back TARP so quickly.
Not all banks are created equal. Of course, I don't need to tell you that. Of the three that we have just seen make these announcements, Bank of America, Citigroup, Wells Fargo, which one should we have perhaps tried to keep in the TARP program for longer?
Well, I was actually just looking last night and early this morning at the capital structures, and they've all raised a fair amount of equity over the last few months. But it's really the thing that worries me the most are the assets that are still there, and those are troubled more in, I think, the Wells Fargo and the Citigroup relative to BofA, which is a lot more diversified.
Do you think the feds have knuckled under? Are they being browbeaten by the likes of Vikram Pandit or John Stumpf or Ken Lewis, even though he's on his way out?
You know, I think what's happened is, frankly, there's this enormous shift on the part of the Fed to try and get the economy back going. And when they look at what the root cause of us not having a quick recovery, I think they see that a big reason is that the banks aren't lending. And so they're trying to push to do that. And so they're trying to create this environment where they're working well with the large banks, but the banks are hinging on this TARP issue, which to me is something that really should be addressed in 2010. Imagine a situation, frankly, in which they have to go back for additional TARP money. I don't think that the Fed would be able to get that approved. And so I think we're making a big bet now that the credit issues are over and that we should be focusing exclusively on trying to get unemployment down and the economy to recover more quickly.
Jason, we heard so much about the need for more lending yesterday from President Obama, and the banks, Bank of America, Wells Fargo, were forced to make some statements, some public statements about it after the fact. How much of a risk from your perspective is this political interference going forward?
Well, I think, frankly, the government's done an excellent job of trying to focus on the right things. I just think that we're muddling the waters a little bit by incorporating the TARP issue alongside the desire of the government to try and push forward and get higher lending. And remember, you know, we've heard over the last few weeks, even Chairman Baer has been pushing banks to lend more. And I think that's a critical component when the head of the FDIC is even pushing banks to lend more money.
Jason, quickly, how much of a blow is it to Bank of America that Bob Kelly is out of the running for CEO?
Yeah, I've always thought there's only 3 or 4 true, rare, excellent bankers in the country. And beyond that, I think it matters more how deep your bench is. And Bank of America wasn't going to end up with a Jamie Dimon or a Dick Kovacevic. And so I don't think this is that big of a deal for BofA. I think that they've got good talent internally. There's other bankers out there throughout the world, globally, that could come in and do a fine job. They're not going to get that real premier top 1 or 2 person in the country, but it shouldn't be that big of a blow to them.
All right, an investor's perspective on what to do about the banks. That is Jason Tyler of Ariel Investments. Jason, thank you very much for joining us.